Hello everyone, this is Dan Hussey, Director of Education here at ElliotWaveForecast.com. I wanted to do a quick video on the use of momentum indicators in the market. Momentum is probably one of the most misunderstood technical indicators we have. I think it's probably one of the most useful as well, so long as you know how to read a chart, understand the Elliott wave behind the momentum, and how different Elliott wave structures form different kind of patterns in momentum. And the momentum indicator we'll be using today is just a price oscillator. This is a basic price oscillator. Comes in all different versions, including double oscillators and all different sorts of fancy ones that you can get into. But for today's purposes and for general practices, just a simple price oscillator can be used. So in this case, I'm using again, just a simple price oscillator. The short length, or the SMA that it's using as its short determinant, is a 5-period SMA, and the long length SMA is a 25-period, and we're using the price close. I'm using a histogram viewing style so that you can see when price goes, in a relatively positive momentum, we pop above the zero line on a histogram, and when price goes down, we head below. Now, we're looking at a 240-minute chart, or a 4-hour chart here, of the Aussie US dollar, and what we're really looking for is a three-wave structure to the downside. This three-wave pullback was pretty well forecasted here at EWF. We had a pullback in 3 waves into equal legs and full 50% into this 74.50 area. Now, forecasting that as a structure and a price measurement is one thing, but understanding the momentum behind it is a whole nother. And because we're looking for a 3-wave correction in a WXY, or an ABC for that matter, just a 3-wave move, we look for a very specific price structure in the momentum. And in this case, you can see the W wave petering out in this kind of blue, or this mountain, so to speak, and then you can see the first pullback in this 3 waves, WXY, in this red W, as a 3-wave move here in the WXY, in this 3-wave valley that heads down into the W structure. Then we get our X wave up, which ends up becoming a new mountain peak. And you can see that X wave up in price structure here, up into this red X wave. And then the subsequent Y wave down, to complete the full 3-wave pullback in this blue X. So you have red W, red X, red Y down to complete the same 3-wave structure in the oscillator. You see a lowest low valley here in the W, a highest high peak in the X, and then another lowest low value in the W. Now, something you might find interesting is that price bottomed out here into the 74.50 area, and it reversed, and we're now looking for that price reversal to continue and actually take us through these prior highs. And yet this was not the weakest, as you could say, valley. In other words, as we came down, you'd kind of expect, if you're going to reverse in price from momentum, you would expect there to be what is called divergence. Now, divergence is a useful tool, but it's usually more useful on the smaller time frame when you're looking at the completion of a single leg, but is not necessarily useful when you're looking at the completion of a full structure. And there's a very big difference there, because we're looking at a 3-wave structure down, which, as you can see, the third leg is actually the strongest leg. So, W, X, and then this Y leg is actually the strongest leg down. As you can see, it actually goes below all the other prior lows in this structure. And that's very common in a 3-wave move in Elliott wave. We actually see C legs, or in the ABC structure, that C structure sucks everybody in and ends up becoming almost a false signal in momentum. Third leg moves are always the strongest in momentum. That includes the third leg in a corrective structure, like this WXY off this peak in the Aussie US dollar in the 4-hour time frame, where you can see the red Y wave in the completion of blue X down is actually the strongest wave. Now, when we dial in a little bit closer, we can take a look at this Y wave down and the completion of this solid Y, or this one leg. And what I mentioned just a few moments ago is that sometimes momentum Now when we're looking at the completion of an individual leg, not the whole structure, because remember the structure, the third leg in the structure was the strongest, right? Now the completion of that one leg down, we're actually looking for divergence. In other words, you can see how as we rallied up in this red X wave, we had a peak in price that was not in line with peak in the oscillator. That peak in price, and you can see how peak in the price actually occurred here with red X, and I've shown that here in the oscillator how they are not at the same level. And you had divergence in the completion of that leg. In other words, momentum failed. Even though we had a new high in price, that's what we call divergence. And that was a signal for the reversal in the other direction. And sure enough, the reversal occurred. We headed down. You had your strongest wave down in the middle of this leg. This could be, also considered maybe a 5-wave move, but that's neither here nor there. The point being is that you have divergence in that final leg down, and that final push lower in momentum fails to break a new low. And even though you had a new low in price, you don't have a new low in the momentum indicator. And that's what we refer to as divergence within the completion of this leg. And sure enough, that divergence was a signal for a reversal the other direction, and you saw the market turn. So remember, when you're looking at an ElliotWave structure, you look for that third leg to be the strongest in momentum. And when you're looking at an individual leg in that structure, you look for a divergence to be an indicator of reversal. Tricky and almost the opposite idea, but it's all a matter of perspective and what part of the cycle you're looking at. And once you can master and put those two techniques together, understanding the ElliotWave cycle as well as where momentum comes into play, it can actually become a very, very useful trading application. And again, I'm Dan Hussey from ElliotWaveForecast.com. Be sure to check out everything we have to offer in terms of educational resources, as well as 3 live webinars every day, including 4 different times a day where we publish our analysis. So I hope you enjoyed this video, and I'll be back with you as price action develops. Take care.